The federal government introduced sweeping changes to mortgage rules last year to cool down the country's housing market and reduce high-risk borrowing. But while the changes were aimed at fixing problems in places like Toronto and Vancouver, they've also had effects here in Newfoundland and Labrador. Joining me in our studio to discuss this is Paul Taylor. He is the president and CEO of Mortgage Professionals Canada. Mr. Taylor, thank you so much for coming in.
Thanks very much indeed for having me today.
So you say that new rules are causing major problems for first-time home buyers, especially in this province. What are those problems?
Some changes were introduced to the mortgage insurance eligibility requirements in October of last year that require first-time home buyers to qualify for their mortgage at a higher interest rate than the rest of the market. That's actually creating a bit of a purchasing power reduction for those folks, and it's making it more difficult for them to get onto the first rung of the property ladder.
So what about problems for people looking to sell their homes?
Well, because the first-time homebuyer community is now finding it more difficult to amass the funds to get into the marketplace, that actually means that there are fewer buyers for those folks to sell to. And so you might find that people are listing their property and it takes a little bit longer for them to actually turn that property over. Their listing might last on the market a few more months.
So first-time home buyers we're a little worried or are being impacted by this, but there are more changes pending. What are those changes?
Well, in addition to the stress test that first-time home buyers are seeing, the regulator of the financial institutions, OSFI, is considering implementing a stress test for all Canadians, which would mean that anybody who needs to qualify for a mortgage would have to qualify at a higher interest rate than is actually required. And that will basically mean a bit of a purchasing power reduction for all Canadians.
So how does this work? So I already have a mortgage, so if I were to buy a new home, I would be under this stress test. But I guess also if I just wanted to maybe take some equity out, would that affect me as well?
Anytime you're looking to renegotiate the terms of your mortgage, I think you would be subject to this new stress test. So if the current interest rate environment says you can get a 5-year fixed term at, let's say, 3.2%, under the proposed new guidelines, you'd have to qualify as though the interest rate was 5.2%, or 2 percentage points higher than the actual rate. And just because of the way that the mathematics works on that, if you have higher carrying costs for the interest portion of your mortgage, that actually means that on your average monthly budget, you can afford to borrow less money, which impacts your purchasing power.
So it's going to be certainly an eye-opener for a number of people in the next coming months.
It could have some far-reaching consequences. We're a little concerned that if everybody in the marketplace finds that they're able to afford less home, that is going to have some downward pressure on house prices in general. And when folks start to feel that their homes might be worth less, people start to tend to save more, not go out as often, or take their money back out into the local economy. And it can actually have spin-off effects for local businesses and communities as well.
Now, the mortgage rules were changed to deal with overheated housing markets in Toronto and Vancouver. What can be done then for smaller markets like Newfoundland and Labrador?
There is actually in place a stimulus program by the provincial government to assist first-time buyers get into the market. But for the proposed stress test that OSFI is bringing forward, they're still in consultation mode. At Mortgage Professionals Canada, we've been asking them to reconsider the 2% that they're asking for, maybe bring that down to something a little bit below 1% so that the impact of people's purchasing power isn't quite so severe and doesn't have the same knock-on effects in the local economy.
Well, Paul Taylor, I thank you so much for coming in.
Thanks for the opportunity.